Hi, this is Kevin Gormley, a CPA that does financial planning, and today we're going to talk about rising dividends in the form of money being returned to us. So I'm going to use an analogy, but before I get to the analogy, let's talk about rising dividends. Okay, let's say, for example, that you own a stock and it pays $3 of dividends. Okay, it's a $100 stock, pays $3. What is that? That's 3%. You're receiving 3% return on your money. Okay, so every year you get that money. And let's say the dividend then rises the next year to $4. Okay, so next year you get $4 returned to you. The next year it rises to $5. And then the year after it rises to $13. And so you receive $13. And finally, for this example, it rises to $20 a share. So now you receive $20 for each share you own. Okay, now what is going to happen to the price of the stock since you keep getting more and more money? Well, I'll get to that in a second, but let me give you the analogy. Okay, so the analogy is you go to work for a company, you're right out of school, the job only pays $35,000. Very few people want the job, and so you start working there, and the company realizes that turnover is too high, so they start raising your salary up. You know, every year they raise your salary, raise your salary, raise your salary. Let's just say, for example, it's a little ridiculous, but it goes all the way up to $100,000. And there's no longer any openings in your division. But a few people retire, and then they post these jobs that are, all of the things being equal, the same job that you did at $35,000, but now they're paying you $100,000 a year. So how many people do you think would answer the ads, would apply for these jobs now that they're paying $100,000 a year versus paying $35,000 a year? There's going to be a lot more, right? I mean, that's pretty obvious. So with rising dividends, though, what ends up happening is as dividends increase and more money is being paid back to us as investors, it's like rental payments for owning the stock, more people are going to want to buy the stock and get the higher income. We like raises in pay. So the $100 stock that was paying $3 of dividends is now a stock that's paying $20 in dividends. What do you think the stock price will be worth? So in essence, what happens with rising dividends is typically not only do you get the payments, but you also get a stock valuation that continues upward because people want those income. They want the raises in pay. So the couple caveats that I have is, number one, I would not invest in just one dividend paying stock. I would invest in low cost funds that hold many dividend payers. And the second thing is that it's about total return. If you get a total return of 10% per year, it really doesn't matter that much if you receive it in dividends and capital growth, or if you just receive it in capital growth. So dividend paying stocks are part of a great diversified portfolio. So if you have more interest in this, please let me know. Dividend paying stocks can be very exciting when they rise the dividends. Hopefully the stock price will rise. Thanks for watching.